They are the proud parents of 2 children, Michael and Annabeth, and he's here today to talk to us about insurance. Please help me welcome Senator Kirk Talbot.
Thank you. It's glad to be here, and I appreciate the invitation. Again, my name's Kirk Talbot. I'm a state senator from District 10, and as she said, I'm chairman of the Senate Insurance Committee. So I'd like to touch a bit on kind of where we've been with insurance in Louisiana, kind of where we are now, and where I think where we need to go, and then I'll be happy to answer any questions. Right after Katrina, between the post-Katrina time and now, well, before the 4 storms, Delta, Zeta, Laura, and Ida, we had a pretty stable insurance market. We had good availability. We had decent affordability. We had carriers that were willing to write here. We had choices as consumers, and we had relatively stable rates. As a matter of fact, I think Commissioner Donlan has stated that there were many years in that gap where the rates really only went up, not even the cost of the rate of inflation. So we enjoyed pretty stable rates. Obviously, after 4 storms in, I think, less than 18 months, that has kind of turned that on its head, very much like what happened with Katrina. And in many ways, I think these 4 storms are really worse than what happened in Katrina when you look at the type of damage and the type of storms those were. With Katrina, as you may recall, we had a lot of flood damage. That flood damage was picked up by the National Flood Program, not by private insurance. With these 4 storms, it was almost all exclusively wind, which meant that all of that came out of the private sector and really hurt the private sector and stressed the private sector. And as you've seen and as you've heard, we had companies go insolvent, companies pull out of Louisiana, and so on. So, as far as Citizens Insurance goes, which is our insurer of last resort, that's the insurance where if you can't get picked up by anybody else, they have to take you. It's a state-run agency. It's owned, I guess, really by the state, by the people, by the taxpayers. Much like what happened after Katrina, the policies pre-Katrina were maybe 40, 50,000 people in Citizens, and those were people that were pretty much uninsurable, whether they were cloth wiring on old houses or so many problems that they just were uninsurable in the private market. Those were the people that were filling up the ranks of of Citizens in the post-Katrina world. Then Katrina hits, just like now, people flocked to Citizens because their companies failed or pulled out of Louisiana. So those numbers swelled to about 170,000 policies. Back then, Governor Blanca, who doesn't get the credit she deserves on stabilizing our insurance market back then, she instituted the incentive plan much like we have now. They set aside, I think, $100 million, $29 million ended up being used. We had 5 companies take that money. All of a sudden, we've got companies writing policies again. They actually attracted other companies that didn't take the incentive plan, started coming in, and our prices stabilized, the market stabilized. We had companies writing policies. We went in the years from the post-Katrina until before these 4 storms, we went down to, maybe 35,000 policies in Citizens, which is almost dangerously low, like we couldn't keep the lights on. I sit on the Citizens board because of my position as Senate Insurance Chair. So we watched those numbers just dwindle and dwindle and dwindle, which is great because that means that they're out in the private sector enjoying a better premium than if they would have stayed in Citizens. So what happens now, we have these 4 storms. Citizens ranks are swelling again. I think we're north of 135,000 policies. We don't have availability. We don't have affordability, just like we did in the post-Katrina market. So I filed a bill last year to reinstate that incentive program. We really couldn't get any funding. At that point, which was last May and early June, a lot of these companies hadn't failed yet, so we didn't really see the need to fund it right then. We thought we could fund it in a special session, which we did, or maybe fund it in a joint budget meeting. So right after that, companies start failing. We put in $45 million for the incentive fund. We also increased their surplus requirements, their cash on hand requirements. Commissioner Donlan hired a third-party company to come and maintain and monitor their reinsurance levels, their solvency levels on I think a monthly basis, and they'll be reporting to us, I think, on a quarterly basis. So a lot more guardrails, a lot more financial requirements that those companies have to make sure that they don't go insolvent. And, of the 5 companies that got money in the original incentive plan, 3 of those companies are still here today writing policies. One of them pulled out of Louisiana 4 or 5 years ago, I think, because they just wanted to leave Louisiana. One of those companies did ultimately fail because of events that happened in Florida. So really nothing that happened in Louisiana caused any of those 5 incentive companies to fail. So now we have, I believe, 9 companies that actually signed up for $62 million, which is $17 million beyond what we allocated. So there will be efforts, and I support those, to bring in another $17 million to the incentive plan. And kind of what we've learned, again, what I touched on earlier, is insurance companies seem to have a herd mentality. They all leave at the same time, and they all come back at the same time. And the incentive fund is kind of what kicked off, post-Katrina, that influx of companies coming back. And that's what we hope and anticipate will happen now, because we need to get people out of Citizens. Citizens has to be 10% higher than the highest policy in that parish, so people are paying a lot at Citizens. And those rates are going to go up due to state law and due to the way that program is designed. And, the real global issue in insurance is reinsurance. That is the insurance that companies buy to make sure that they're solvent, that they can pay claims when they have storms. The reinsurance market is super stressed globally. There are events happening all around the world, all around the country, wildfires in Australia, flooding in Germany, all the wildfires out west in California. All of those things are stressing the reinsurance market. To give an example, the reinsurance that we bought for Citizens last year was, I think, around $40 million. That same amount of coverage is over $125 million this year for the same amount of coverage. So it's very difficult to buy reinsurance, and you're only as good as the reinsurance you have backing you up. So that's kind of a layout over as far as Citizens goes. As far as the legislation goes, last session we heard a lot of complaints about multiple adjusters, delays in getting their claims paid, all those different things. So we passed a lot of, I think, very good consumer bills to kind of address that. One of those was a bill that I had that limited, it's called the multiple adjuster bill. So if we have more than, I think, 3 adjusters in a 6-month period, insurance companies are now mandated to give you one person of contact, give you a summary of your claim, where you are in the process, and give you one phone number to contact, so you're not getting a new adjuster and having to start the whole process over again. Having multiple adjusters is not necessarily a bad thing, because you might have a special problem that requires a different adjuster to figure out what your claim is and what your damage is. But obviously we had serious problems with the amount of adjusters over the last 2 years. And look, a lot of that had to do with COVID. Adjusters are not immune to COVID. Their families got COVID. They got COVID. The economy was very strained under the COVID mandates. You had companies like Amazon, saying, come work for us online and stay at home. And if you're an adjuster, do I want to go live in Lake Charles in a hotel with no power, with no restaurants open and no stores open, and living away from my family where I have my spouse or my child might have COVID? So all those kind of things kind of hit, which stress that. All that being said, insurance companies had to do a better job, and I think these bills are making them do a better job. I also had a bill that made insurance companies say, look, you got to have a plan now. When a storm comes, you got to tell us where you're going to find all these adjusters, where they're going to stay, where they're going to live, how you're going to feed them, how you're going to pay them, all these things. Insurance companies can't just hire hundreds of adjusters to sit around and wait for storms. They have companies that do that, and they're kind of like roaming gypsies, so to speak. They just go to where the storms are, but they all pull out of the same pond for that, and they're all going after the same company. So we did that. We also had a bill, if you remember, Cynthia Lee Shang, Parish President, Jefferson Parish, and LaToya Cantrell, the Mayor of New Orleans, did not declare emergency evacuations. And what that did not trigger the additional living expenses of many homeowner insurance policies. So, which I think was, should have been triggered because it was really just a technicality that they didn't, quote unquote, declare a state of emergency and that you had to mandatorily evacuate. But, the damage was there. I couldn't get back to my house. I had oak trees all over our street. We had power out. We had no water. So we should have gotten additional living expenses. Commissioner Donnellan, rightly or wrongly, issued an executive order making them pay it. A lot of the companies voluntarily paid it. I think State Farm was the one that fought it. It ended up going to court, and State Farm won. So Lori Slagle, the state rep from Jefferson Parish and Metairie, filed a bill to mandate that insurance companies pay that additional living expenses, as long as the damage, was sufficient to warrant that. But it did not require government calling for a mandatory evacuation. So that was a very important bill. We also had bills that strengthened their solvency capacity, strengthened the amount of cash they have to have on surplus. So I like to think that we passed a lot of good consumer bills. Now we have this session coming up where we're going to have to address some of the man-made problems we have in our statutes that discourage insurance companies from coming. Florida, which was always the poster child for what is going wrong with homeowners insurance, before their special session, which fixed a lot of their man-made problems, you had 70% of all the litigation in homeowners insurance in this country were filed in Florida. It was a train wreck. Companies were going insolvent left and right, and they had no storms. And a lot of those companies had satellite companies working in Louisiana that failed because of their mothership in Florida failed. So you had kind of like the big tree falls down and knocks down the little tree of Louisiana. You had a lot of companies failing in Louisiana due to events in Florida. They fixed their problems. They had a very successful special session, and we're going to have to address some of those issues like bad faith, like attorneys' fees, things that are going to be hard pills to swallow. We're going to have to challenge to try to fix that. We also have a couple of very unique laws in Louisiana that are very consumer friendly. Ultimately, they might be hurting consumers because they are limiting capacity in Louisiana, and that is not good for consumers. Two things. One, we have something in Louisiana that no other state has, and that's the 3-year rule. If you've been with your insurance company for 3 years, when you hit that 3-year anniversary, you are quote unquote married to them, meaning they cannot drop you for any reason unless they pull out of Louisiana altogether or they go insolvent, which sounds great for the consumer, right? You're going to have coverage, but insurance companies, they want that freedom and that flexibility to, lack of a better term, shed risky policies after they've had major catastrophic events. So, that is it's a good consumer law, but that is something that is preventing availability in Louisiana, which affects affordability, which has a bad effect on policyholders. So that's something that that's going to be looked at. I don't know if any bills have been filed yet, but I'm pretty sure they will be. Another thing we have, which only I think 11 or 12 states have, is prior approval by the commissioner. The commissioner in Louisiana has to approve rate increases. Most states don't have that. Most states, insurance companies operate like Drusilla Seafood or Rouse's down the street. They set the price from what the market they think can bear, and they set their price based on how they can stay solvent and how they can stay profitable. We don't do that in Louisiana. We have, you have to go to the commissioner, and the commissioner can accept that or deny that. So, that is something that we know is, I think is good for consumers. But again, does the long-term effect of that hurt consumers because it limits affordability and availability? The only way that we are going to have affordability in the insurance market in Louisiana, we need competition. We need insurance companies fighting over everybody in this room, fighting for their policies to try to get their business. And we just simply do not have that right here. I want to touch on a couple of bills that I'm going to do, and then I'll be glad to take your questions. One bill that I'm going to file with citizens is a bill to shield citizens from attorney fees, bad faith, and class action lawsuits. There's no reason why we should have those penalties or have that law for Citizens. Citizens is our insurance company. It is the insurer of last resort. It is basically, for better or for worse, owned by the people. We are the ones that get assessed. Every homeowner's policy in Louisiana gets assessed when they need money and when they get stressed and get borderline, they can't go financially insolvent because they just assess taxpayers. They are not in it to make a profit. The Citizens is a nonprofit. So there's no reason why Citizens would act in bad faith, because they're not trying to make a profit. So many of the Citizens type companies around the country do not allow for attorney fees and bad faith penalties and class action lawsuits, and we need to do that. Unfortunately, we cannot legislate the fact that we're never going to have storms again. We're going to have storms again. We're going to lean on Citizens to be the shelter for people like us that are not going to be able to find insurance in the private market. So we don't need to have these laws that just stress Citizens financially. If you remember, there was a huge class action lawsuit after Katrina on Citizens. And the basis of that lawsuit was that state law said that if you don't timely inspect a home and timely get that claim paid, you're acting in bad faith. Well, the adjuster firm that Citizens used at that time was based in South Louisiana and took a direct hit by Katrina. So, Katrina was the worst, natural disaster, I think, in history. So in America. So of course, Citizens adjusters could not get out there and inspect these homes in 30 days and make that first point of contact. So lawyers filed a class action lawsuit. $240 million later, that lawsuit was ended, and it cost the Citizens Insurance Corporation $240 million. The average dollar amount that the claimants got after lawyer fees was a measly $3,500. What could we do with that $240 million right now? It would be unbelievable the financial good shape that Citizens would be in. I want to talk about fortified roofs real quick and how this could tie into that $240 million. People ask me all the time, what is our solution? How are we ever going to get out of this mess of homeowners insurance in Louisiana? 2 words: fortified roofs. That is our way out. Fortified roofs are roofs that basically do not blow off. They are widely accepted in the insurance world and in the construction world. There are about 50,000 fortified roofs in America. About 38,000 of those are in the state of Alabama. They have taken this thing and run with it. Hurricane Sally, a number of years ago, 130-mile-an-hour winds. Every single house with a fortified roof did not blow off. If your roof doesn't blow off, your claim is drastically smaller. And you can move back into your home, and insurance companies literally fight all over themselves to write the premium on a house with a fortified roof. Imagine if this class action lawsuit wouldn't have happened years ago, that $240 million, we could fund way more than we need, that grant program, which was passed last year for the fortified roof program to retrofit existing homes. Our building codes went up a lot January 1st of 2023 and increased to a far better building code than we've ever had. Almost to the fortified home and fortified roof level, about a little bit below it. I will file a bill that will take us to the fortified roof level. We need to be the state that has more fortified roofs than any house in America, than any state in America. So we're going to get there on that. Now, the problem is, what do we do with all the existing homes? So moving forward, hopefully we'll have it to where every new home gets a fortified roof. Biggest question I get asked is, well, what does that cost? Is that a ton more? It's only 8 to 10% more for a fortified roof than building a regular roof. Now, if you're buying a new home and you're doing a 30-year mortgage, that's really very, very doable. The average premium decrease from having a fortified roof could be anywhere from 15, 20% to 50%, depending on how far you go if you fortify your home with the windows and doors as well. The grant program in Alabama started out at a couple of $1,000s. They really didn't get any hits at all. When they hit the $10,000 mark, where they said, look, we'll give you $10,000 to retrofit your roof, it blew up and exploded, and now there are 38,000 of the 50,000 roofs that are fortified. That grant program was started last year under a bill that House Insurance Chairman Mike Huvall filed and passed. We don't have any funding in it currently, and that is going to be hopefully funded very well and very much needed this session. Again, I would love to think what we could do if we had that $240 million back. Another thing we're going to do that we don't have in Louisiana that we're going to file is current law in Louisiana says that insurance companies may give you a discount for fortifying or mitigating your home to protect yourself from storms. We're going to change that may to a shall, and we're going to go a little bit further and even say that we want the insurance companies to state in their policy not only that you're going to get a discount on your premium if you fortify your roof and go beyond, but what percentage you're going to offer. We're not going to tell them what percentage to offer, but you can't just say, we're going to give you a discount. Tell us how much, 20%, 30%, whatever. So I think that's going to be a great bill. Lastly, I want to talk about a bill that until today I have not publicly spoken about at all, and that I think is something that I take very seriously and something that I want to kind of throw out there and kind of see the reaction of it. I will be filing a bill to appoint the Commissioner of Insurance instead of having an elected Commissioner of Insurance. We are one of only, I think, 11 states that still elects their insurance commissioner. And looking forward, obviously our current commissioner is not going to run again, but looking forward with the challenges that we have, and I've seen this as being on the insurance committee for the last 15 years, 7 of those years serving as chairman, the specialty and the expertise that we need a regulator. We need someone with experience to come in here and have the freedom to make the hard decisions and to take the politics out of that office. There's 4 things that I want to touch on, and the bill has not been drafted yet, so I apologize on not having a copy of the bill because we just kind of started doing this right at the last minute. But the 4 cornerstones of this bill are going to be the selection process, the term of the commissioner, the removal process of the commissioner, which is very important, and the expertise level. So selection process, like I said, there's only about 11 left that elect their commissioner. The rest appoint them, and there's different ways that you can do it. Most states, the governor, he or she, whoever that is, appoints the commissioner, and that's that. Some states have a commission or a blue ribbon panel from stakeholders in the industry that come up with names, submit those names to the governor, and the governor can pick one of those names. Some states have the governor part of that commission. So we're going to kind of look and see what we think will be best for the people of Louisiana as far as that goes. The removal process. We want, and there's something called the R Street Report, the letter R, streetreport.org. That is a group out of Washington, D.C., nonprofit advocacy group that looks at every insurance market in the state and ranks your commissioner process, your statutory, your statutes that regulate insurance, the regulation process, the auto insurance, home, everything you can imagine. It's a really good publication. So a lot of that I'm taking from this, and and I understand why they think that the insurance commissioner should have some protection from just removal, from the governor waking up one day and saying, you're out of here. We want that commissioner to be able to make the hard decisions, kind of like the state auditor. We appoint the state auditor, but you can't just remove the state auditor without going through cause and having a removal process. So again, I wish I had more details on what that removal process is going to be. I'm in the middle of looking at that now. As far as the term goes, most terms that I've found are a lot of them are 2 years, a lot of them are 4 years that run concurrent with the gubernatorial term. Some go 6 years. So we're kind of going to look at that and see, how we want to do what we think is best for our constituents to get the best commissioner possible. expertise. We want to have someone that has regulatory experience, that has expertise in the field of regulating insurance companies. We don't want to have anybody that's been part of a failed insurance company, that's gone to part of insurance companies, or part of situations where companies went solvent, or companies didn't do the right thing. So all those things are what I want to pull together and see if we can come up with a process that will serve Louisiana better. I do take it very seriously. I mean, we're eliminating an elected position, and that's something that we all value very much. But I think we need to do what's best for Louisiana. We got we have big problems here, and we're gonna have storms again. So we'll see what happens. The way this bill works is you have to have a 2/3 vote in the House and a 2/3 vote in the Senate to pass this bill. It is subject to veto by the governor if they so wish. It does not go to the ballot for the voters, because it's not a constitutional office. It is a statewide office, but it will not go onto the ballot. So it's something kind of like what they did with the superintendent of education years ago, and when we used to have a commissioner of elections. So that being said, I know I said a lot, and I hope I didn't bore anybody too much, and I'd be happy to answer any questions if y'all have any. Yes.
So looking at the incentive fund, and I believe it's 17 million extra that you guys are wanting. So is that from the original 9 or so companies that the commissioners talked about, and why are we allowing them to ask for more money?
Well, they're not allowed to ask for more money right now. They just, I believe it was on a first come, first served basis, and everybody just kind of submitted what they wanted, and that happened to be $17 million over the 45 that's been allocated. So, that's something that the legislature is going to have to debate, and the governor's going to have to decide, what he wants to do as well. But, the sooner we can get, I believe, that money into their hands and get people out of Citizens and get some availability in our market, we'll see the affordability factor in.
So I know in the legislation they could ask up to 10 million, right? So is it just a result of more of those companies asking for that higher limit?
I think so, yes.
Okay.
I think so. Yes, sir.
You mentioned the bill related to attorney's fees. Would that exclusively deal with lawsuits against citizens, or is it lawsuits against all homeowners, insurers?
Good question. My bill just deals with citizens.
Okay.
I think there will be, and there has been talk of a bill that pertaining to the private sector as well. And, I'm kind of researching that right now. It seems like there's not a lot of states that allow that. I mean, we're not talking about scrapping the bad faith penalties. We're just talking about, our bad faith statute, I just think needs to be looked at, and I think it needs to be debated and studied.
Yeah, the commissioner has come out and said that he would support that bill and is sort of touting it. In Florida, there was a similar bill that our bill, as I understand it, would be modeled after. It's been super controversial. It's kind of like divided party lines there. How would you see the politics of that law playing out in our legislature?
Obviously we have a majority now, a super majority in the Republican Party in the House with Francis Thompson from Delhi switching to the Republican Party. I can tell you this: if you look at Florida's bad faith statute prior to now, which is not that different from ours, it was a train wreck, and that system was being scammed, and that system was being abused. And what was the result? Unaffordable insurance, companies failing without storms. You can't have companies fail without storms, because you're going to have storms. They're going to have to, make it through that. And I think Jim, if I may speak for the commissioner, he's just looking at what other states are recognizing, what their problems are, and trying to fix them. But to answer your question, I think a bill like that would probably pass. I don't know if it would pass with a supermajority, but I think it would probably pass. But that's going to be debated heavily, as it should. And again, we don't want to do away with bad faith penalties. We want to be able to hold insurance companies accountable, but we don't want to have statutes that discourage insurance companies from coming here at all, and therefore hurting consumers because there's no availability here. Yes, ma'am.
You're talking about your bill to change the office from elected to appointed. What do you think an appointed commissioner could have done differently in our current situation than our elected commissioners?
That's a good question. I mean, I can't think of anything, right offhand or specifically. It's my understanding that when Jim Donnellan took over as commissioner, he already had 5 or 6 or 7 years of regulatory experience being his previous jobs with the department. I don't know if I could name anything specific. I'm just, just looking at options that I think will make it a better process. Yes.
In having the appointment of the commissioner, do you have any concerns about the increased activity and contributions to the governor's race?
Well, you mean as far as insurance companies contributing to the governor? Certainly that would be, that's something that certainly would happen. I mean, let's be honest. Of course that would happen. It happens now. If you look at the filing report of all the commissioners in the past, the people that donate are people in the insurance business. So I don't know if that would be any different. I mean, obviously, the governor, when you're running for governor, you're taking contributions from a gigantic pool of contributors, whereas the insurance commissioner is a very, very, very small pool of people. So I'm not concerned about that, if that's your question. But obviously, it would be more insurance companies contributing to the governor, if not already.
Why would you have a term limit on an appointed commissioner? I mean, you mentioned the auditor, the legislative auditor. There's no term limit. There's a
Right.
two-thirds vote. You got to get rid of them with a two-thirds vote.
Right.
So why would you have term limits if you want the continuity?
Well, that's a great question, and that's what we need to figure out how I want to move this bill and get buy-in from stakeholders. I'm not opposed to that. The commissioner in Alabama who's appointed served 14 years. Continuity is important. So I'm looking forward to the feedback from industry. I'm going to be speaking with appointed and elected commissioners from around the country to kind of get their take on it. But that is not off the table, that idea. Yes.
You talked about some of the consumer protections, such as the marriage after 3 years, which I'm sure is a security blanket for people south of I-10. And this is in hopes that it'll attract more of the companies, which is good, and hopefully lower rates and everything. But how are you balancing keeping our consumers protected so they don't lose their insurance or get taken advantage of, while also trying to bring the companies?
Well, that's the dance I do every day as chairman of Senate Insurance. Our committee, whenever we have a new session, we always have new members. We have a new member this year with Royce Duplessis. Our job, and we all agree, is consumers first. So that is a delicate balance between protecting consumers, but also attracting insurance companies to right here so we can have affordable rates. So that's something that I struggle with every day. But at the end of the day, we're going to do what's best for the consumers at the end of the day. But that's a great question. And, again, you can't have affordability without availability. That is the only way to get reasonable rates. We can't legislate and mandate that people right here, because as we've seen, they'll just leave. And they are leaving. And, we've heard this from some of the opponents of some of these bills in the past that, the sky's not falling. The insurance companies say this every year. They're never going to leave. Well, they're leaving now. They're leaving now. So we got to do what we can to get the availability back. Yes, sir.
I had gotten approached with the cabinet conference, but some other denominations, mainly Baptists below I-10, were losing their insurance. They were insured by church mutuals.
Right.
And I reached out to Representative Ball, but you're probably aware. I'm just saying, I think they're looking at that, and just like anybody else,
Right.
They're concerned about evangelization and everything below I-10.
Right. Below I-10 is obviously the danger zone. The company you mentioned, insures a lot of faith-based organizations, churches, and so on. And, you know, we need to keep them, you know, as much as possible, because that is a specialty niche, and there's not a lot of companies in this country that do that. Anybody else? Yes.
You're talking about the fortified roof program, so would that be, the grants would be aimed at
The great.
current homeowners whose roofs were
Correct.
built when
Correct.
that wasn't original?
The grant would be for people that have existing roofs that want to retrofit their roof to the fortified level. There's 3 levels of fortified. The first level is basically just a fortified roof. The second level is like the silver level, and that's where you're fortifying windows and doors and all that. The gold level, which is the third level, where you're fortifying your walls, your everything. And again, in Alabama, they started their program. They were doing $2,000 grants, $3,000 grants, and just getting no takers. When they hit that $10,000 mark is when the floodgates opened. And now they only have 2 counties that touch the coast. We have, 22 parishes, I think. It exploded. And again, the vast majority of fortified roofs in this country are in the state of Alabama.
So, I
Good.
was gonna ask, how much money are you looking to set aside for that?
That's a good
Are
question.
you looking at 10,000 a house, or?
I think that in Alabama, the grant is up to 10,000. So that's the most you can get. To answer your question, how much money do we want in that grant program? I'm going to fight for as much as we can get.
What range?
Gosh, I don't know. I mean, I would have to ask the guy that sits to the right of me, who sits on finance, Senator Henry, what that range is. I mean, you know, but putting a fortified roof on a house is investing in Louisiana. It's investing in our citizens, and it is also making Louisiana more attractable to insurance companies, because they want as many fortified roofs in their portfolio, because they know that they know they're good with those. They know that if the roof has damage, it's going to be minimal, and you're not going to have the catastrophic events of the roof blowing off and all that damage, which turns into a nightmare. So, you know, I think it'll be money well spent. You know, Alabama, they have run out of money, then they fund it again. I think they do it like every quarter. So, you know, they just kind of do it as they go. But we're going to try to get as much money as is responsible to the budget as possible to fund it.
Just following up on that, you talked about Alabama's 2 coastal counties, so are you thinking you would limit such program here to our 22 coastal counties?
You know, that's a good.
A lot of wind damage up in there.
Look, tornadoes in Mississippi over the weekend, tornadoes in Alabama. We've had tornadoes in Monroe. So I should know this, but I don't know what Huval's bill says about the grant program, if it is prioritized to people below I-10 and I-12. I don't know that.
It's statewide.
It is, okay. I'm being told that it is statewide. And again, when you have insurance companies that have a bunch of policies in North Louisiana that are fortified roofs, that's going to give them capacity to write policies below I-10. They want to spread out their risk. And anytime you can have a fortified roof, no matter where it is, it's going to give them more capacity to take a chance on a house below I-10 or I-12. Anyone else?
Yes, sir.
Yes.
You mentioned about the roof. How are we going to have oversight on the contracts to make sure that they're doing a fortified roof?
Good question. Great question. So with fortified roofs, you get a certificate that says that your roof is certified. You have to have that certificate done every year. You have to be recertified every year. That certificate is transferable. If I sell you my home, I have a fortified roof, you get the certificate now. We're working on that. There are going to have to be some more inspections. With today's technology, with drones and the internet and the iCloud and pictures and all those kind of things, you know, they've solved that problem in other states like Alabama and North Carolina that has a lot of them too. So we don't need to reinvent the wheel. We can overcome that, but that's a great question, because, you know, we don't want people getting a grant for not getting a fortified roof, and the insurance companies are going to want to know, hey, am I insuring a roof that really is fortified, or do they say it's fortified? Because if you're going to put in statute that I got to give them a discount, they're going to want to know that it really was done. But again, that's been solved in other states, so we can fix that problem. But that is first and foremost, and I believe that was the governor's question when I was on a conference call with him, he said very wisely, hey, we got to make sure that they're actually doing this, and we got to hold the insurance companies accountable that they're going to give those discounts if we take this step. Anyone else? Yes, sir, in the back.
Let's assume that the grant program that you're talking about passes and is set up. Does that take away from the need to do what we did this past year, the big pool to bail out the insurance company?
Well, the grant program has already been passed. That's in law. It just wasn't funded. So, but to answer your question, if we take off with the grant program, will that have a need for the incentive program? You know, the incentive program, hopefully that money will start going into insurance companies within a month. So, and those policies hopefully will be taken out of Citizens in the next 5 or 6 months. The grant program for fortified roof is a marathon. That is going to take some time. So that is the long game. We're not going to be able to, you know, unless we go allocate $300 million, we're not going to be able to get people up to speed on those roofs. And you're going to have to build it. You're going to have to reconstruct those roofs. So that is more of the long game. So hopefully the incentive program will be long gone by the time that really starts kicking in. But they'll work in tandem. But you know, the fortified roof, that is our way out of this problem that we have that is not going to go away. Yes.
I guess the follow-up to that, of course, after Hurricane Katrina, we started having the insurance companies charges for the homeowners, you know, percentage of the damage rather than just using your deductible.
Right.
Replace your roof. If the fortified roof program catches fire, so to speak, do you think that would take away that percentage?
That'd be a good question for an insurance executive. I don't know. That's a good question, though. That's a good question. So, yes, sir.
And the fortified roofs that you're talking about, that's already in the new standards for new construction that were implemented this year?
Almost. So that's why I'm going to have my piece of legislation. We're about 95% fortified. We don't use ring shank nails, and we don't do something with the drip edge, and I can't remember the terminology for that, but that's what my bill is going to do, is to get us a fortified. If any of you, probably not, but if any of you have ever tried to pull a ring shank nail out of a piece of wood, it is very difficult. And we should not have any nail nailed in a roof in Louisiana moving forward that's not ring shanked, because they are very hard to pull out. And that's what keeps your shingles on. So we're not there yet, but hopefully after this session, we will be there. And even if that bill weren't to pass, I think people are going to be so incentivized to do that anyway, that's going to take care of itself anyway.
And did you say, I think you said it adds up to 10% of the cost. Is that the cost of the house or the cost of
the roof? So when you're building a new construction, and if I have one quote from a contractor that says I'm going to put on a roof, and the other quote says I'm going to put on a fortified roof, it's like 8 to 12% higher for the fortified roof. But again, you know, if you're doing a 30-year mortgage, you're spreading that out. But the amount you're going to save on your premium far exceeds the money you're going to have to fork out for the fortified roof. And it increases the value of your home by, I think, on average 7%. If the study, there's a study out of the University of Alabama that studied the increased value selling resale value of your home. It's like 7% more, because again, that certification is transferable. So if I buy your house, you have a fortified roof, I'm going to get that certificate that says that roof is fortified. So it's a win-win all the way around. But storms are going to come and wind's going to blow. And if we got to step up and do something different. And everything is kind of being considered right now. And I think this is just the direction. We got to start thinking out the box, and we got to do things differently here in Louisiana. Yes.
Sorry, one more question. You mentioned in your discussion of kind of like the reasons for bringing your bill that would make the commissioner an appointed position. You mentioned the role of politics has played in the position in the past. Can you think of examples of some instances where politics has like shaped the role, or maybe like in a way that was not ideal, impacting policy or something like that?
You know, I don't know if I could point, you know, to one thing, you know, that that does that. Again, that is a factor in the bill. My bigger factor to me is someone with the expertise in regulation and oversight that I think is important. It's a very complex issue and very complex industry. And look, I'm sure there's people out there that are running. I don't know who all is running that have expertise in this area. But again, it's not something that, I'm going to fall on my sword for this bill and I'm going to twist arms and do whatever I can. I think it's a worthy discussion. And if it's something that, obviously, I'm just kind of debuting it today. I want to hear from industry. I want to hear from constituents. I want to hear from this and that. And we'll see if it's something that's desirable to do. And I say that because, we are taking away an elected position. So it's not like a normal bill where, hey, I'm going to do whatever I can to pass this bill and I'm going to use every influence I can to get a piece of legislation passed. This one, I feel like there needs to be buy-in instead of one person just running this flag up the hill. We need to have buy-in because we are taking away an elected position in statewide, and I take that job very seriously.
Thank you very much.
Okay, thank you.